Hashtag BITMINE'S ETHEREUM ENDGAME. One investment firm just quietly accumulated nearly 5 million Ethereum tokens. That's 4.87 million ETH. We're talking about almost 5% of the entire Ethereum supply sitting in a single vault. And nobody's really talking about why. This is BITMINE, and they're positioning Ethereum as what they're calling a wartime store of value. Not Bitcoin, not gold, Ethereum. So what's actually happening here? Over the last 18 months, BITMINE has been on an acquisition spree that's hard to ignore. They're not buying small. Every dip, every geopolitical flare-up, every time the macro picture gets darker, they buy. According to their recent filing, they now control 4.87 million ETH. For context, the total Ethereum supply is roughly 120 million tokens. Do the math. That's institutional-grade conviction. The timing matters. This accumulation accelerated noticeably after the Russia-Ukraine conflict started reshaping how institutions think about asset safety. BITMINE's strategy documents use language like decentralized resilience and geopolitical hedge. They're explicitly framing Ethereum not as a speculative play, but as insurance. The same way governments hoard gold, except this is digital, borderless, and impossible to seize. Here's where it gets interesting. Bitcoin already plays that role for some funds. Everyone knows Bitcoin is the store of value narrative. But BITMINE is making a different argument. They're saying Ethereum's utility, its actual use case as a settlement layer, as the backbone of decentralized finance, makes it stickier, more resilient. They're betting that in a fragmented world, an asset that can't be controlled by any single nation-state and has real economic throughput is more valuable than something that just sits there. The numbers support this thinking. Since BITMINE announced this strategy, their accumulation has continued through market volatility. They bought during the summer downturn. They bought when sentiment was worst. They're treating this like a 20-year commitment, not a trading position. This matters to you because of what it signals about institutional capital movement. When a firm this size moves this decisively, it's not noise. It's a repositioning that usually precedes broader adoption. Grayscale did this with Bitcoin. MicroStrategy did it. Now BITMINE is doing it with Ethereum. And unlike retail investors, they have the balance sheet to actually move markets. The wartime store of value angle is also significant because it reframes the entire Ethereum narrative away from being a platform for DeFi speculation and toward being essential infrastructure. Boring. Institutional. Defensive. What this means for your money is simple. If BITMINE is right, if geopolitical uncertainty continues to drive demand for assets outside traditional systems, Ethereum just became a different asset class in institutional portfolios. The 4.87 million token accumulation isn't just a position. It's a bet that Ethereum becomes as essential to digital age finance as gold was to the industrial age. Subscribe to CryptoSenius for daily financial intelligence.